Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing well. All right, good morning, good morning. All right, so I've got one of my favorite economic calendars on the screen right now. This is the calendar from, let me move the clock here. This is one of my favorite calendars, and it's the one from Estimize. Estimize is the place that I go to. You can access this free. They have a free version, they have a premium version. So just mentioning that. And it's a really cool place to be able to track the specific stocks that you want to follow. And more importantly, if you are the kind to deep dive the expectations, where are we 3 weeks, 4 weeks, 5 weeks before earnings? What are those whisper numbers? And how are those changing in those days and weeks before earnings? That will tell us a whole lot more. And if you've ever wondered, do I need to look at the history of earnings? What happened a quarter ago, the last quarter, the quarter before that? Not really, right? Not really. That's not where the game is being played. So if you're wondering, do previous history of earnings, beats or misses, give you a better idea of what's going to happen in the current quarter? Absolutely not. There are tendencies, but really it's a coin flip. Let's be honest. It's a very binary, it's a coin flip. The best way I have found, and in terms of understanding what's discounted, we already know this to be true, right? We already know buy the rumor, sell the news, not buy the previous quarter, sell the news, right? So what we want to do is always ask ourselves, what are those metrics that we already know about earnings, and how are they changing? Where are they? So what is the consensus versus the Wall Street consensus versus the company guidance? We know the consensus that's not Wall Street, that's not company guidance, as the whisper number, right? So tracking that whisper number, what's already baked into the cake, is what's going to help you understand what a beat or a miss actually is, because what's being factored in to a certain degree is Wall Street, to a certain degree is company guidance, but how we're positioned against what we think is going to happen is actually in that whisper number. And that's what this is. This is kind of a reboot of something that Wall Street used to do until it was basically outlawed, which is something called force rank. Once upon a time, the analysts at a brokerage would pick up the phone and ask people, they'd call the company up, talk to people in accounting. They'd say, hey, how are earnings looking? I'm talking going back 3 decades plus. That was very common practice. And in not so many words, it was something called force rank. Well, they said you can't do that anymore. So the next best thing we can do is sort of Kickstarter, sort of crowd funded, but not funded, right? Crowd expectations versus where the company guidance or the Wall Street guidance is. And that has made a huge difference. Now, a lot of what I said might be like trying to describe to somebody how to tie a shoe, just easier to show you. Check out Estimize. I have no skin in this game. I just think it's the perfect tool to use during this time of year. And look, we've got Apple on Thursday. Is this the most significant hot zone for the week? Absolutely not. We still have, you'll take a look, Tuesday's pretty quiet for us here. We have the jolts at 10 a.m. heads up. That's a jobs number that's going to have some impact on what we think the Federal Reserve may or may not say tomorrow. If you want to see my two sides of the coin, by the way, in other words, what is it the Federal Reserve, what are the two choices we have going into the Federal Reserve? What are the two most likely scenarios? If you take a look at the May 1, this week in the market issue, you'll see I've got a Powell is dovish scenario and why he might be, and a Powell hawkish scenario and why he might be, and where sort of the dust settles, regardless of which way he is. He's going to be one or the other, right? He's going to really be one way or the other. Right now, what's discounted, what's expected is a dovish Powell. So we'll see what happens. All right, so let's also jump into our charts here this morning, and I'm gonna use the Thinkorswim charts. We haven't used Thinkorswim in a bit. I've been using TradingView, which I actually love those charts, but let's jump into Thinkorswim. And what I want to take a peek at is mostly bonds. I've got a long position in bonds. This is something that we did going into the last 90 minutes or so of the trading session, as the expectations. Oh, where did I lose my comments? There we go. I thought I lost my comments there. All right. Where we went into the last 90 minutes or so, saw that we had an opportunity to buy a move into the DPMRs. We did so, and right now it's not really going as much in the direction as I would like, but it's certainly up from the entry zone, which is great. These are TLT calls and ZB moving higher. TLT moving higher is indicative of lower yields. So we're really going to see how the yield game is being played, basically one session in front of tomorrow's FOMC. Another game being played is the dollar going to be weaker or stronger? If the dollar is going to be weaker or stronger, what we have is a play on the euro that we can understand the dollar through. In other words, the dollar is a basket, right? It's a dollar index basket. It's not the US dollar, it's a US dollar index basket. So much like the S&P is a basket of stocks, the dollar is a basket of currencies. 58% of it is the euro. This is the best way to understand what's going on with the dollar. And right now, the dollar is actually a little strong, or we could say the euro is a little weak. Either way, this is not necessarily a problem, because if you look at the overall trend of the euro, it's up, which means the overall trend of the US dollar is down. And we did dive into this chart and a discussion of this in the current issue of This Week in the Market. And I actually put a dollar chart, because usually I'm looking at the euro. I'll put a dollar chart and some key levels to watch in this week's issue. All right, so then the last thing is the S&P, right? The S&P. Equities are going to be nervous, gang. And even once we get past the FOMC, we're probably going to see a lot of concern. What did I type in here? We're probably going to see a lot of concern for, I hate when that happens. A lot of concern for where, and what did I do here? I typed in some cockamamie symbol. I did, and completely froze up my toss. Good times. All right, you know what we'll do? We'll punt. Toss has this really, Toss people, if you're listening, your pop-up window is really irritating, because it's hard to find sometimes on a multi-monitor computer. Not that any trader would have one of those, and then where the heck it is always a mystery. And then the whole thing freezes. All right, there you go, Toss. Little critical advice there. Okay, let's go to TradingView. I do like this platform so much better. Toss does a lot of things well, don't get me wrong, but let's jump on over to TradingView. Okay, so what I want to do here as we jump into TradingView, all right, is take a look at the S&P. Now, all the tools that I have running on Toss, I have running on TradingView. Big fan of this. It's a broker agnostic platform, which is to say you don't have to be with a certain broker. You don't even have to have a funded account with a certain broker. This is designed to allow you to hook up some platform. So let me show you here. See that very bottom? I think you can see that trading panel. These are all the different brokers, not even a complete list. These are all the different brokers that I could potentially plug into, trade through via TradingView with their platform. Or if nothing else, if I've got a TradeStation account, which is what I plug into my TradingView, when I pay for the data with TradeStation, it feeds the TradingView platform with the TradeStation data, so I get live futures data. Otherwise, you've got to pay the exchange, whatever dollars for access. But if you're already paying that through your broker, a lot of the brokers will say, yeah, if you log in to TradingView with your username and password, we'll just plumb that right in. So it's pretty cool. It's pretty cool. Otherwise, I'm not getting live data, by the way. All right. So that's what I want to keep in mind. What the S&P is going to do, knowing that we're already discounting a relatively dovish Powell, meaning, again, we're expecting either in September or November a Fed pivot. That might be a little more than Powell wants to commit to, no doubt. As long as he doesn't completely take that off the table, equities should be able to keep moving higher. All right, let's get to our questions. All right, I know we've got our training room here. Good to see you all. and the YouTube and Facebook and Twitter. All right, cool. I love Twitter. Probably my favorite of all the socials. My second only to YouTube. YouTube's fantastic. Okay, a little sip of coffee. Okay, let's jump into the questions. Can we look at NVDA on the daily? Yeah, of course. Sadiq, what I'm seeing on NVDA is probably one of the best uptrends in any market. If I take a look at 2023, this year, and I look at where we are in relation to two very important things. Now, these things are foundational things, they're basic things, they are levels that are going to complement any approach. And that is, where is the point of control and where is the 200? The 200 is sitting at 207.80, 82 actually, and the point of control for the year is sitting at 268.80. Those are going to be two very important levels. After that, I'd keep an eye on the area around 237, 237 and a half. All right. So now I know what key volume and technical levels we're above. Then I want to get a little bit more granular. If it's an uptrend, this is where buy the dip is valid. So every now and then there'll be some chucklehead out there who says buy the dip doesn't work. That's not true. It's just that it may not be the right strategy. Yeah. So I'll see that from time to time. It cracks me up. Buy the dip works in a trend. NVIDIA is in a trend. So what could define the dip? It could be a Fibonacci retracement. I'm a big fan of that. We call them Pingalas because we need to quit giving Fibonacci credit for something that Pingala did. So we call them Pingala levels. So we've got those retracements. We've got our volatility support and resistance known as the daily price movement range. And any one of those could be levels to watch. Now, remember, we had a very big up day. Wait for a bit of a pullback and buy the dip. What's buy the dip? Buy it on sale. And that's the way I look at that. I would just look for something that is clearly valuable. All right. The perception is it's valuable. Wait for it to go on sale. It's so true. The old saying, Wall Street's the only place they throw a sale and no one comes. Now, here's the thing. Just because something's cheap doesn't make it on sale or valuable. We want to find something that we already want and then get it at a better price. And a stock is no different to me. All right. Okay, next up, Jay Foster asks, good morning. I'm curious as to what caliber of trader the Sector Secrets Mastery is for. Caliber. That's what I would say. I mean, when you say caliber, so now I'm thinking about, well, so let me put it this way, Jay. What experience level? Let's start with the experience level. Because most of my tools are automated, the learning curve is very, I think, easier compared to most because I'm not going to require trend lines being drawn or subjective levels being identified. They're all automated. Almost everything is automated, right? Meaning the lines and levels on the chart, on my chart, are already there. I use the same automation, right? Okay. That's number one. So from beginner to advanced, perfectly fine. In terms of what type of trading, so that's experience level. What about what type of trading do we do? Frankly, all of the above. So let me show you what I mean. Some of our traders love to day trade. I love to day trade, but I day trade, maybe the first hour of the day. So when I'm day trading, I'll do that with the group in the Sector Secrets Mastery from 9:20 to about 10:35. We take a quick break and we come back for the other style that we do in the room, which is swing trading. Trades that will have overnight exposure from days to maybe weeks, right? So there's the day trading where we're going to be flat at the end of the day, and then the swing trading. Now we do stocks, we do ETFs, we do options, we do futures, as long as they're connected to one another via sort of this high concentration weighting that dominates market movement. We can do that. It's not difficult to see the connective thread from NASDAQ futures to the XLK ETF to Apple, right? That is actually one conversation. It's a single thread that runs through those. So as long as we're looking at it with that mindset, that high concentration weighted mindset, we can trade anything. And then the very last approach that I have in the mastery is once a week we get together and I talk about what's in my longer term. I like to call it my position portfolio, weekly time frames, weekly macro. there's no such thing really to worry about macro every day, gang. There's not that many rate of change events happening to have a macro conversation every day. It's really going to be based on what economic events are being released and what they are measuring. So we take a look at macro once a week, so we're not over analyzing. And then we take a look at weekly charts and put on a position portfolio, which has been doing very, very well. So short term, sort of intermediate, if you will, and really long term. So it just depends on the time of day. And as far as experience level and style, that's what we do, Jay. So I appreciate the question. All right. Oh, and then on top of that, just to complement the live sessions, those of you that are in the mastery or already this week in the markets subscribers, you get access to this. If you're in the mastery, it's included with your membership, and if you're a subscriber of This Week in the Market standalone, you get a video from me every week on Friday, and you get the new issue of This Week in the Markets each Monday morning. All right, so moving on. Thank you for the question. What percentage of my trading is futures? Pierre, I really couldn't tell you by percentage. Gosh, I don't think of it that way. I look at futures first. In other words, before I even trade an ETF or stock, because I teach sort of boats and tide, right? An approach that remembers that the broadest look at the market is indices, then the sectors, then the stocks. I like to add another level to that, which would really sort of be the ocean, if you will. What is central bank monetary policy doing to currencies? And therefore, then what's happening with commodities? And then we could get to index, sector, stock. That's something that I've taught for a really long time. And it's something that I've embraced since 2008, because that's where mutual funds and ETFs really sort of diverged, and the popularity continues to surge in ETFs. That means the influence ETFs have on the stocks within them, and even on the indices that they're part of, it continues to grow. So I don't know as a percentage what it is, but I'm active in futures every day because we're day trading every day. And I do like overnight positions in futures, but I really like to remind traders, this is not the futures market of my youth, right? I remember the affordability of futures in the late 80s and most of the 90s. Now, initial margin, that's how many dollars you need in your account to control a single contract. A lot of those initial margin requirements for overnight exposure are completely bonkers expensive. And I think it's pricing out a lot of futures traders who would like to take things overnight. No problem. There's so many ETFs and even micros now that make it more affordable, and by way of smaller position size, lower risk. But I think a lot of traders now focus on day trading futures because of that exorbitant initial margin that just comes with wanting to trade a lot of popular futures contracts. So that's the way I think about it. I hope that helps. And yeah, in terms of what I personally do, yeah, I don't know that I can give you a percentage, but we look at them every single day because, Pierre, we must, right? We must. In order to understand what's happening in the broadest sense, indices, currencies, treasuries, very important, right? And then I'll do everything from euro, crude, bonds, notes, S&P, NASDAQ, Dow. Did I mention crude oil? Crude oil, gold. I'll look at those regularly in the morning for day trades. And then a lot of those have ETF alternatives, and a lot of them have micro futures. So it makes it far more available to a broader group of traders. All right, next up, Ambas asked, for my TLT calls, would it be for this month or June to have more time? Oh, on the calls that I have in TLT? Well, it's based on ZB, so I'm always going to look at the ZB futures. But kind of going back to Pierre's question, even when I'm not going to trade the futures contract necessarily, I'll still be looking at ZB to trade TLT. So right now, Ambas, we have very near-term options because I don't really need the exposure or even want to pay for exposure past FOMC. Not really. So a lot of the expiration decisions, days to expiration decisions, have to do with when would I consider getting flat because of a major economic release, like the FOMC on Wednesday. And then which time frame am I setting up the short-term swing on? So on a daily time frame, my expiration is usually going to be a little bit more generous, while on a 1 hour short-term swing, I don't need as much time. So that's going to dictate a lot of what I'm going to do in that regard. All right. Let's see. Next up, what is the lowest I see SLV going to go long? I don't understand the question. What is the lowest you see SLV going to go long? Um, I'm sorry, I don't understand the question, my friend. We can pull up SI. Let's go ahead and do that. So here's silver. I do want to be long silver. In fact, I believe today's update over at Countdown Trader, if y'all haven't checked that out before, check out Countdown Trader. I believe today's update is going to be the silver trade that we started discussing back on the 25th. So today, in terms of what I'm dealing with, go back to the chart here. If I'm looking at silver here, this is silver futures, right? These are silver futures. Now, if I'm looking at silver futures from the perspective, and I'm not hooked into my live right now because my trade station's doing whatever the heck it's doing. I'll have to restart trades. Thinkorswim. I'm not hooked into the live, but here's what I want to do. You mentioned SLV, so yeah, I'll pull up SLV, but I will always pull up SI futures before I consider what I want to do with SLV, right? So I'll always start with SI futures. They're a little weaker this morning, which is frankly not what I want to see. But what I will look for are previous lows. What I will also look for are Darvis support levels. And what I want to also look for are volume levels. So I'll ask myself, where are near-term volume levels? Where is previous support? And then I'll manage my risk accordingly. So the idea that silver could head higher is the path of least resistance, no doubt. Oh, I didn't realize how far I've gone over. My apologies, gang. This is what I want to focus on, the long side. But I just need either a minor low or maybe an hourly price movement range on the intraday. But I like the long position. I'm still in it. I just got to manage risk this morning. All right, gang, I got to wrap it up. I've gone over. I will see you all tomorrow, same time, same station. All right, gang, be good to each other.